Question for you. Did you actually get richer in 2025 or did you get busier? You see, we work hard all year, we pay bills, we buy groceries, we try to save a little, but unless you stop and look at the numbers, you're actually flying blind. Today, we're doing a net worth audit. Don't panic. This is not the CRA coming for your money. This is not the CRA coming for your house. This is just a personal wallet audit. And in the next few minutes, we're going to find your real number and we'll see exactly how you did in 2025. And then we'll use this to set the baseline for 2026. So let's dive in. Welcome back to my channel. My name is Josh. I am a finance professional and chartered accountant. I speak your language, which is money, investing, and finance. And if you haven't done so, please go ahead and subscribe. And today we're going to calculate your net worth, which is to show you how much you got richer by in 2025. Or if you didn't get richer in 2025, we'll figure out how to get you richer in 2026. And then we're going to analyze your numbers. So stick around. Let's go. So let's start with the good stuff. And this is my favorite part. This is everybody's favorite part. And these are your assets. And what this means is everything you own that has value. So first, list your cash. So check your checking account, your savings account. Do you have cash under your bed? Do you have cash in a drawer somewhere? Write down the value of all of these cash items and set that aside. Secondly, we'll look at your investment account. So everything you have in an account that is not cash, but investment. So I'm talking stocks, ETFs, any of your brokerage accounts, anything that you have invested that has value. List the value, the market value of all of this, not how much you put in. The market value of all of this, write it down under your cash as the second amount. If you're in the US, I'm talking about your 401k, your Roth IRA. For those in Canada, I'm talking your TFSA, that is non-cash, your FHSA, RRSP, or whatever investments you have. So write down the value of this as the second item. Remember, the first item was cash. The second item is investing. Now, third, list your property. So if you own a home or any investment properties, write the market value, not what you paid for the property. So check things like Zillow to find an estimate for values of property around the area when you own a home and use that as the equivalent value of your property. But if you have a recent appraisal for your property, you can also list the value you got from your appraisal under the value of your investment property or your home price. So that's the third item you should have on your list. Also on the property, you can also list your car, not the amount you paid for the car, but you can check the resale value of the car. So you can go to Auto Trader or any other online car sales website where you can get a reasonable quote for your car, or you can look at comparable prices of a car in that same build, in that same model, rather than the equivalent value. And if you have other valuable items like camera, jewelry, paintings, and whatnot, anything that you can sell for a good amount, anything that you can exchange for money within 24 hours, that is an asset. So write a reasonable estimate for these assets. And I'll recap. So cash, investment, home, property, other values. When you have a reasonable value for all of these items, add them all together, and that forms your total assets. And now for the not so fun part, this is the tough part. These are your liabilities, which is simply everything you owe to other people. Now, to do this, we have to be very honest so that we can truly find your net worth. First, log into your bank apps, look at your credit card balance, the current balance as you have it today. Write down that amount, even if you've not paid it, even if you have the money to pay it off, as long as it is currently unpaid, it is a liability. So write down that number. Secondly, loans. So if you have things like student loans, personal lines of credit, any loaned amount, any amount that was given to you that you have to pay back, write down the total amount of the loans you currently have. The third, auto loans. So if you're currently paying back any loans on your car, that is still a loan. It is still a liability. So we need to write down the value of that loan, the outstanding value as of today. And if you have a mortgage, yes, you own your home, but if you're still paying a mortgage on your house, the mortgage portion is a liability. So I need you to write down the value of your outstanding mortgage as part of your liabilities. And the final portion that goes into your liabilities are other things. So if you have like a buy now, pay later type of arrangement, the amounts that you still have to pay, let's say for instance, you bought a phone for $1,000 and you've paid down $300. That means you still owe $700 on the phone. That 700 is a liability that you need to list. So if you also took money from a friend that you need to pay back, it's also a liability. So we need to list all of those liabilities, add the total, and that forms your total liability as of today. All right, so we've done the hard work. We've done the main work of calculating your assets and your liabilities. That part is done. That is very important numbers that you've calculated right there. Now, we're taking it a step further, and if holding your assets in one side, deduct your liabilities from it. That's assets minus liabilities equal to net worth. If that number comes out positive, congratulations, you're doing a good job. And it simply means you own more than what you owe. That's the easy definition. But if that number comes out negative, chill, slow down, don't panic yet. Don't panic at all if the number comes out negative, seriously, because knowing that number is the first step towards fixing it. And a lot of people have started from negative net worth and built their way up to a bigger positive net worth. So the key starting point is knowing where you stand at the moment, and then we can start building your way back into a positive situation in 2026. Now that we've calculated your net worth, we're about to do a little analysis just to see how much you've grown, not just this year, but relative to last year, because that's how you measure growth, one period compared to another. If you have your number from 2024, if you have your net worth from a previous year, compare that with where you are currently for this year. If this year's net worth is higher than last year, that means you've made more progress. That means you've actually grown your net worth, you've grown your portfolio, you've grown your wealth. But if it didn't, if your last year's number is higher than this year's number, now we need to figure out what actually went on during the year. Did your portfolio go down? Did you have any unforeseen situations that required you to sell off your assets? Or maybe you bought a house and the value dipped, or you bought some bad investments, or that the investment market just turned against you. That is something that we can fix. But if you don't have a number from last year, and this is the first time you are doing a net worth audit, well, this is good news, because this is your ground zero. This is your baseline level. And going forward into next year, you can then compare subsequent year's number against this year to measure how well you are improving your wealth. Now, I'll need you to do something. Write down this number somewhere, put a date beside it, and say December 2025, your net worth is X, Y, Z. So you know the number you've calculated. Write that down and keep that somewhere we can always track as we go along into the new year. Now that you've written that number down, we need to set a goal for next year, because the goal is to increase that net worth. We don't want your net worth to just stagnate in one period, right? Write a goal for next year. Do you want to increase it by 20%, 50%? Do you want to add $100,000 to it, or 50K, whatever it is? That is your goal. And that is something that we can start working on as soon as the clock hits January 1, 2026. Now, if you must take away anything from this video, take away these 2 points. Increase your assets and reduce your liabilities. It's that simple. If you must take away anything, those 2 points. Increase your assets, reduce your liabilities. You've just done something that 90% of people never do, which is facing their finances. You see, it takes courage to look at your numbers. It takes courage to track where you are at the moment. But if you don't track your finances, if you don't track your money, there's no way to grow. Tell me in the comments if your net worth grew. If you don't want to say the number, if you don't want to say how much you're worth, just say up or down and I'll get it. And if you also want to share any tips for people looking to grow their net worth, please let's have a conversation in the comments. Someone will be listening, someone needs this information, and it will be valuable going forward. So if you like this simple breakdown, if you like this simple audit, please hit the like button. It tells the algorithm that you find this content very helpful, and to also push more related content to you and help my channel grow. Thank you so much for listening, and I'll see you on the next one.